Hi, I'm Chris Matheson, a member of our merger arbitrage investment team here at Gabelli. Mergers and acquisitions activity remained subdued in the first quarter of 2023, totaling $580 billion globally, or a 44% decrease compared to a robust first quarter of 2022. A total of 12,700 deals were announced on a global basis in the quarter, with about 28% or 3,500 announced in the US. The relatively muted level of new deal announcements in the fourth quarter spilled into the new year, as new investor concerns emerged, further dampening deal activity. Potential banking contagion following the collapse of Silicon Valley Bank and global antitrust authorities taking a more firm stance on transactions added to the uneasiness within the new deal environment, in addition to those that are currently pending. For the first time in several quarters, the healthcare sector saw the most new deal announcements, totaling just shy of $100 billion, or up 60% versus 1 year ago. The sector contributed 17% to total deal values as Pfizer announced the largest transaction of the year, agreeing to acquire cancer drug company Seagen for $229 per share in cash, or nearly $43 billion. Technology and industrials accounted for 16% and 13% of total deal activity respectively, both declining versus the same period last year. Cross-border and international transactions remain absent in the quarter, as global uneasiness of announcing new transactions remains. Deal making within Asia Pacific and Europe totaled $145 billion and $90 billion respectively, both declining 47% year over year. The quarter marked the fourth largest opening period ever for private equity sponsored deals, which totaled $139 billion, or about a quarter of total deal volumes. Buyout firms look for opportunities amid the market's dislocations to acquire companies using committed capital following years of record fundraising. Private equity-backed transactions have been a bright spot over the last several quarters, as strategic buyers have been committed to other capital allocation priorities. Biden administration regulators remain focused on their stringent competition objectives, causing deal spreads to widen in the quarter. Standard General's acquisition of TV and radio station operator Tegna has been held up by the Federal Communications Commission, and Intercontinental Exchange's $11.9 billion cash and stock acquisition of mortgage origination platform Black Knight has been blocked by the Federal Trade Commission. Regulators have signaled that they will continue their firm stances with a more watchful eye to ensure that markets remain competitive. But notwithstanding, several high-profile transactions were allowed to proceed by regulators in the quarter, notably Amazon's acquisition of One Medical for $3.9 billion and CVS Health's purchase of Signify Health for $7.2 billion. While volatility was again felt across the M&A landscape, deals continued to close as buyers and sellers remained committed to completing their transactions in a timely fashion. The Federal Reserve's interest rate increases have benefited merger arbitrage strategies and will likely continue to be a tailwind. Companies will gain further visibility into global concerns and look for highly strategic acquisitions with strong synergies, leaving a positive backdrop for corporate transactions to accelerate through the remainder of 2023. To learn more about our merger arbitrage investment strategies, please visit Gabelli.com.